Thanks for joining me early this morning. As Misha mentioned, I'm Nolan Peterson, CEO and President of World Copper. So we'll get right into it. World Copper is a Vancouver-based junior mining company with operations in Chile and Arizona. So I should say exploration projects. We have our flagship asset in Chile, the Escalones project, and we have the Zonia project in Arizona, which we just brought in 3 months ago with a merger with Cardero Resources. So the interesting thing about World Copper compared to many other junior exploration companies you may have heard about or may be interested in or be following or listening to today is that we have both of these assets, Zonia and Escalones, have 43-101s at PEAs, preliminary economic assessments. They're both at an early stage of development, late stage of exploration with established resources with fantastic economics, which we can discuss. They both have substantial upside potential, which we are starting to explore as well, but we'll talk about that in a second. I'll talk briefly about the management. So myself, President and CEO, I have an engineering background. I spent over a decade in project development. I've been involved in the construction of 2 major mines, the New Afton, Kamloops New Afton Copper Gold Project, as well as the Rainy River Project in Northern Ontario. And I've also been, after that, I got an MBA and a CFA, and I've been in finance for the last 6 or 7 years in corporate, at a corporate level. So I've been building companies and projects for almost 20 years now. Our chairman, Henk Van Alphen, is a storied mining developer based out of Vancouver. He has numerous success stories along the way. 2 of his biggest ones are Corriente Resources, which was an exit for $860 million, and he was also the chairman and founder of International Tower Hill Mines, which was at one point worth over $1 billion. Marcelo Awad is our executive director in Chile. He was most well known as being former CEO of Antofagasta Minerals for 8 years, where he took that company from $4 billion to $20 billion, made them one of the largest copper producing companies in Chile. Roberto Ferro, former Codelco head of exploration with 30 years of experience. Krzysztof Napierla, he's our general manager in Chile. He left a lucrative career with KGHM, which is one of the world's largest copper companies, as well as their general manager in South America and their general manager of their Frankie mine to join us to develop the Escalones and Cristal projects. And John Drobe is our VP of exploration with over 30 years of experience in porphyries in South America and North America. And he has a lot of experience working with Henk Van Alphen as well. I used to put this slide at the end of the deck, but I like to lead in with it now. This is really, I used to build the story and then say, this is why you should invest, but why don't we just cut to the chase? We have 3 outstanding value drivers. 2 of them today I'm going to focus on, Escalones and Zonia. Escalones and Zonia together, as I mentioned, both have PEAs that have established the demonstrated value of the asset through third-party engineering. It's not me saying there's potential here that, we have a property beside so-and-so or we are chasing high grades. This is engineered at a PEA level. When we put it all together, we have over 4 billion pounds of copper oxide. It's an important distinction. Copper oxides compared to sulfides are much cheaper to develop and operate, and they're easier to permit, cleaner and greener, but you don't generally get large-scale projects like we have. And combined over $2.3 billion US in after-tax NPV at $4 copper, and we have a sub $40 million US market cap right now. These are the types of valuation gaps you don't see very often, and I owe it to the fact that we are a relatively unheralded story. We've only been publicly traded for 1 year on the open markets. We've never done a brokered financing, and we only put out the news for the Escalones PEA 2.5 months ago, and since that time we've had tremendous outreach from majors and strategic investors signing NDAs, but they move slowly, and investors like yourself and myself can move very quickly. I want to bring up this slide. This is a new slide for us as well. This is the junior mining company Lifecycle. We've all seen this for those who follow the market very well. You see projects have at concept, pre-discovery, discovery. There's rampant speculation, drives up the price. Everyone is excited about high-grade drill holes. What the potential is here. There's going to be interest from majors that'll invest. And then you put a resource statement together and you realize maybe the value isn't there, and you drop down to here, and then you're into the development stage before institutional investors get involved and before it gets back to where its true value is. This is where World Copper is with the assets we have. We have skipped all of this phase because we have moved to a development phase and a feasibility phase. That's the next step for us. So that is, and as I mentioned, this is kind of the last opportunity to get on board the train before the strategics start to take an interest. And you can look at some of the charts of the peers that I'll present to you later for comparison, and you'll see the dip and then the bounce back once people realize what the value is. So let's talk briefly about copper. I'm sure most people in this room are familiar with copper and its importance, but for those that are online as well, I'll mention it briefly. Copper is used in the conduction of electricity primarily. It often gets grouped in with battery metals, but it's not really a battery metal. It's used as the bridge from the battery to the use of power. Also, of course, from our electrical grids and anything that requires wiring. Over 20 billion pounds of additional copper supply will be required by 2040. This is on a yearly basis to meet the demand for electric vehicles. And while discovery has been extensive, 17 billion was spent on exploration in the last 27 years. There have been few new discoveries. This really puts it together. I'm sure many of you are also familiar with this as well. This is a projected supply-demand crunch that is expected by the end of 2030, starting in 2025. And this includes the potential for new mine development coming online. So there is a substantial gap here. It was a question from an investor this morning I responded to, what's the role of scrap or other sources of copper? Really, nobody has a clear answer on how this demand gap is going to be filled. Obviously, we are scheduling our projects to come online right around here where we can benefit from the high copper prices. We're currently trading in the 440, 450 per pound range, and Goldman Sachs is projecting 680 by 2025 when we're starting to see a little bit of a widening there. So we believe there's substantial upside in the copper market. And one of the drivers, this is just one facet of the development. This is growth in copper and growth of copper in the use of wind and solar power generation as renewables increase in usage as part of electrification and decarbonization. We expect copper to benefit from that substantially. So let's get talking about our assets. We'll talk about Chile briefly. Obviously, 20-30% of the world's copper is produced from Chile. It's a stable and mining-friendly jurisdiction, despite some of the news that people ask me about in the market. We can talk about questions on that. 8 of the 10 largest copper companies in the world operate in Chile. 10% of the GDP, I think, is of Chile's GDP comes from mining, and I think 500,000 people work in the mining industry in Chile. So obviously a very good mining jurisdiction, especially for copper. I won't talk too much about Cristal since we have a limited amount of time. I'll focus in on Escalones. Escalones is our flagship asset in Chile and in the company. It's a copper porphyry skarn system, and it has 426 million tons of copper oxide resource at a 0.37% grade. Now, those tons and grades, if you're following the copper space, they may seem small, but as an oxide project, and I'll show you a slide on this in a second, this is the largest copper oxide project in exploration and development in Chile right now, as of August of last year when we put out that updated resource. And again, the distinction for oxides versus sulfides is that sulfides are the big projects that cost $2-3+ billion. Oxides, especially the ones like Escalones, have significant copper production at a low capex. So Escalones' capex is 438 million, not billion. This is a map of our property. Everything that's been drilled to date, 25,000 meters, is in this orange circle here. And immediately to the south of that, we are currently drilling right now the Mancha Amarilla, which is, we believe, an extension of the main resource. And we're doing 5,000 meters really at this point just to prove that the mineralogy continues north to south. And if we are successful with that, we'll know that this is just one large resource that's only been half drilled, and that could potentially double this or give us indications it can be doubled in size. We also have 3 other copper porphyry skarn targets to the northeast. Our highest focus is the Rio Negro, which we have surface sampling results on shortly, and then drilling we would schedule for early next year as well. One other important point to note is that we are 35 kilometers east of El Teniente, which is the world's largest underground copper mine held by Codelco. Their mine life is currently to 2072. It's truly a monster mine, and they are on their 5th phase of expansion in the direction of Escalones. So every indication is that we are part of the same belt that houses that monster deposit. This here shows how Escalones does stand out amongst new Chilean copper oxide projects. We are the largest copper oxide project by copper contained by far. And you can see our grades for large-scale projects are very respectable. The only projects that have higher grades are the much smaller projects. And by the way, these are projects that are held by majors too. It's not juniors that are pursuing oxide projects. Majors are as well, and we have the largest in Chile at the moment. So what did we do once we put out this resource statement? We prepared a preliminary economic assessment, which we just issued 2.5 months ago. The numbers are very good. $1.5 billion post-tax, 46.2% internal rate of return, a 2.2-year payback at a $3.60 copper price. What makes this possible is the $438.4 million initial capital. You don't see these types of ratios or numbers in many industries, let alone mining. And also, we have a low $1.12 per pound C1 cash cost. This is not dependent on byproduct of gold, silver, or molybdenum. This is just copper, and it indicates that this will be a profitable mine at any foreseeable copper price. These are some sensitivities on a pre-tax basis where you can see, as we approach the $4 price, we're at 2.7 billion, 2.6 billion, and a 72.2% internal rate of return. Again, everyone, I want to emphasize, if you invest in a junior mining company, you're oftentimes exploring, looking for what the potential is. This is what you want to find. Everybody is trying to find a deposit that can be put into a mine, and with these types of numbers, you don't see these types of numbers very often. And what makes it possible is, again, that we are an oxide project. This is the slide for investors, the most important one that I like to look at regularly. It shows the runway that we have in front of us as we close the P to NAV ratio compared to many other peers of ours. So we are at a PEA stage. All these other projects are at a PEA stage as well. I'm sure you've heard of many of these companies. They're all single asset companies, no cash flows, just like us. And you can see as well that we're all operating in Chile and Argentina. We're all subject to the same jurisdictional risk. And you can see the significant gaps between the NPVs of our projects and our market caps. And this is the clearest comparison is a project called Marimaca, held by the Marimaca Mining Resource Company, Our NAV, they're an oxide project as well. So you can see that. There's their initial capital. It's an oxide project. It's not a 4.3 billion or a 2.8 billion. Their NAV is 757 million. Our NAV is twice theirs. This is on pre-tax basis. Their market cap is 5x ours, and their ratio is 11x ours. What is the difference between these stories that stands out against ours? Again, we've been publicly traded for 1 year. Every one of these projects here has been in the market for 5 or more years, developing their story and message. And again, we're all at the same stage of development. I'll move on to our Arizona asset now because it is also an attractive story. Really, when you think about it, both of these assets are company makers, and I'm not joking about that. There are comparable companies which we can discuss offline. We can show you the comps. Zonia is the project that we brought in January. It is in Arizona. It's 120 miles northwest of Phoenix. It's a brownfield site, so it did produce copper in the 1960s and 1970s. Obviously Arizona is an attractive mining jurisdiction, and the benefit for this project is that a substantial amount of the material of the mine and the current PEA plan that we'll discuss sits on private patented land, which means that this can be potentially permitted and put into operations within a 3 to 4 year time frame. This is some pictures of the brownfield site where the pit has already been pre-stripped. lowers initial capex and ongoing capex. There's a leach pad from former production. There's already infrastructure on site. This is a project that is ready to go as we get permits and develop and de-risk it. There's a lot of cost advantages here. This is a slide here that shows the claims block, 50,000 meters of drilling. It's all near surface. Again, this is a copper oxide SX-EW project like Escalones, low strip ratios, easy to mine, not going underground, not doing massive stripping campaigns. All of this material that went into this PEA that we'll talk about sits on private patented land. Now, we just carried out an internal review of all the data once we had full access to it over the last few months. We've identified already 3 ways to make this project better. The first one is we're going to update the PEA this year in the next few months to reflect higher copper prices, also to reflect and give us a more accurate assessment of capex and operating costs, and also to include up to 50% additional mineralized material that was excluded from the PEA resource in order to sit on private patented land. So I can add 50% to the resource that's in the market right now with potentially without spending a single dollar on exploration because we already have the drill data to support it. So that'll be the first exercise. We've also identified targets around the main deposit, which we will be pursuing, and a third target called the Zonia Norte deposit, which has never been drilled, has the potential to be a brand new defined, very close and proximal to the main resource, representing an expansion or extension of the main mining operation once it's in production. So let's talk about the economics for Zonia. Initial capital, $200 million. This is, March 2018, so 4 years ago. $200 million initial capital at $3 copper, $200 million after-tax NPV. At $4 copper, it's $450 million after-tax NPV. After-tax first-year free cash flow of $150 million. It's payback of a little bit over a year. And at $5 copper is $680 million, and at $6 copper, well, you can see where it goes from there. And again, we have the potential to add potentially 40 to 50% more material to this mine plan. You can either accelerate and make production faster or enlarge it. And then we have the Zonia Norte project to the northeast. So this is our overall work plan for the next few years. Again, we're not necessarily just an exploration company that is, chasing success. We are going to be doing exploration, which we are, as I just mentioned, planned, but we do have a robust development plan as well. So we have at Escalones, drilling at Escalones, drilling at the Rio Negro, and then a PFS in 2024, and then a feasibility study and permitting in 2025, although permitting will be ongoing throughout this entire period. Zonia, we'll be doing a drilling and a PEA update this year, a feasibility study next year, and then permitting and construction. Again, permitting will be ongoing, but receiving the bulk of the permits for construction in 2024, and then we would aim to be in operations in 2025. The capex for Zonia is very low compared to what's in the market. The returns are very fast. I've got many groups already talking to me and saying, when you're at a FS stage, which will only cost, $5 or $6 million to take us to, come talk to us. We will finance this project, especially in this copper price environment. So that cash generation will then, of course, fund Escalones development going forward. This is, again, probably preaching to the choir. A super cycle is dawning. We expect copper prices to be higher on a sustained basis, move out of the cyclical, up and down that we saw. I think it was in the early 2000s, copper was around $2 and then, below $2, and then it went above $2 for a sustained basis. It's never really dropped below that for a sustained period of time. I think that's what we expect to see going forward. Maybe $3 or maybe even $4 is the new long-term floor. And in that type of environment, these types of projects will be built very quickly. Any questions now? I'm happy to take them. Thank you very much.
Have any questions for World Copper?
Yeah.
Okay.
Yes.
For Chile, all of the issues were not
Yeah, I think it definitely has affected us. We get a lot of questions about that. It's unfortunate too because, as I mentioned, a lot of our peers operate in Chile, and maybe they're more well known, so they don't succumb to that. Or there's a flight to perceived safety of a brand name or a project that may seem to be further along in development. But I don't think that the long-term effects of what's going on in Chile are going to really affect us in the long run. The new government in Chile only took power basically 2 months ago, and before that there was really a lack of clear messaging out of Chile. And since the new government took over, I was just in Santiago about four weeks ago, and the mining minister spoke to the conference, the CESCO conference, 3 times for the first time to the industry, gave remarks, and basically reassured everyone that, nothing's going to change for copper mining in Chile, mining in general. The government is very supportive of mining. They just have to find, every new government's going to have some policies, but they're not policy changes, but they're not going to be drastic. So that, I think, really reassured a lot of people. And, BHP already invested $100 million into Filo mining, which is half on the border of Chile and Argentina, just about a month and a half ago or 2 months ago now as well. So, big players are still investing in Chile. I'm not afraid of being there as well. Go ahead. Yep.
I'll summarize it for you. Chile is very friendly.
Thank you very much.
Any other questions? What about water?
Oh, yeah. Thanks. So water, we have, water is always a big question in Chile. There's where you're going to get it. It's a semi-arid nation with a lot of potential drought situations right now, and the continental sources of water are drying up. We just signed an agreement, I think it was 2 weeks ago, or maybe it was last week. Things are moving so quickly, with a company that is looking to build a pipeline into that El Teniente River Valley, which is 35 kilometers west of us. In our PEA, we contemplated getting water from that river valley as well. And so we signed an agreement with this company to tie in to bring seawater to the project site. So that will greatly enhance our ability to permit this project if we don't have to use continental water, and they're already building a pipeline. So it's a great partnership. At a PEA stage, we're well ahead of the curve on answering these types of questions. And really, it comes down to the fact that you have a strong management team that knows how to develop assets, knows that you need to make movements years in advance rather than getting to a point where you're like, okay, we're ready to build it, but we should have started this 5 years ago. We're starting it today.
Question. We still have a little bit of time. I have a question. Obviously, World Copper has been thought of as a company. But now with Zonia, it's Chile and Arizona. And based on your timeline, Arizona is going to be producing likely before Chile.
Yep.
And so really, question is, let's envision a world where both assets are in production. What percentage of the production comes from Arizona and what percentage of the production comes from Chile?
Yeah, so the production from Zonia is about 22,000 tons of copper per year, or 49 million pounds. And the production from Escalones is 52,000 tons per year, or 115 million pounds. So that gives you about 2/3 coming from Escalones and 1/3 coming from Arizona. Yeah.
Then, one more question. You had mentioned that there's already infrastructure on site at Zonia, and I would imagine that's already included in the PEA, is that it's going to reduce the capital costs.
Yes.
So that's already been in the PEA in 2018. Now that you've seen the site, now that you've done your review, what further capital cost reductions do you think are available based on your view of what's there on site?
Yeah, so there's a couple of things there. So there is infrastructure on site, but I don't want everybody to think that it's just to flick the switch and restart. There'd be significant upgrades and expansion required to bring it to a mine of today's standards. What the real advantage that I was kind of pointing out was the pre-stripping done on the pit already, and that, of course, doesn't require any infrastructure upgrade. It already is exposed and ready to be mined. But in terms of lowering initial capital from the PEA, we see the opportunity to use a lot of used equipment as we advance to feasibility studies. So engineers at a PEA stage, they make a lot of assumptions that, you're using brand new equipment sourced in, North America, which can often have very high prices. Arizona is a very developed mining jurisdiction, a lot of mines coming on and offline regularly. So we see the opportunity to say at a feasibility level, when you're looking at specific pieces of equipment, you have a spec now, you can say, well, I'm not getting the exact spec that I need, but I can get one that's 20% larger because someone got a used piece of equipment and it's going to cost half as much. And now we can design around that. At a PEA stage, you can't do that. You have to assume it's brand new and it's properly sized and spec'd. So there's a lot of opportunity there. We think we could trim probably $20, $30 million off the initial capital. Yeah. Thank you.
Well, thank you very much.
Thank you, everybody.